This is a company, if we go back a month and a half ago, was talking about raising up to $4 billion in an IPO. A week ago, they launched, as Kaylee mentioned, to price up to $2.7 billion. What has fundamentally changed with the business when I'm talking to investors and bankers from today versus last week when the deal was launched is not much. Yes, Nvidia is down pretty sharply and the NASDAQ 100 is down more than 2.5%. But when you talk to people that are in the room or talking to people who are talking to people in the room, there's a lot of misunderstanding around what went wrong with the pricing of this. Obviously, if you talk to investors, this is the starting point of a company. But when you're down more than 2% below your IPO price, where people paid just a few hours ago, that causes more consternation, and that kind of plays into this kind of debate.
Well, especially when where you are now is $39 a share. And I'll correct myself. The initial high end of the range was $55 from the initial plan. 47 to 55 was that range. Bailey, when we consider how this is an indicator more widely, though beyond CoreWeave, considering Nvidia, for example, which is a big backer, but also a big customer, what signal could this send about other players that the market is heavily relying on? Speaking of Nvidia here.
Well, it goes back to the debate or conversations that we've been seeing around how long some of this spend will last. When you look at an area that we've seen Cowen analysts calling out, Microsoft pulling back some of their spending, that sounds a bit of an alarm. When you look at Alibaba, Chairman Joe Tsai warning of a potential bubble forming in data center construction, that sounds an alarm, especially related to a company that really makes its money by helping rent out and lease these GPUs. So when you look at a company that, again, Nvidia bought a big chunk of the IPO, about 17%. When you look at a company that is a big customer, according to D.A. Davidson, could be buying 6 to 7% of Nvidia's products for 2024, it's a very tight-knit circle. And in a market that everyone's looking for a reason to sell stocks, that's why you're seeing a number of these companies under pressure. And that's why when we talk to people on the buy side, it's not a shock to see this deal go how it's been going.
You know, Nvidia is also trading back near its recent lows as well. How much of this blows back on the big company involved here, CoreWeave's partner?
I think it's to not overplay it. When you look at the reporting we have about Nvidia buying about $250 million, that's a rounding error for the company, all things considered. But to your point, it's down 7%. Almost 7% this week. And when you look at where it was trading really around the election, you're down more than 25%. So there's broader jitters around what this can mean. And again, with a market that has been so heavily predicated on excitement around Donald Trump's return to the White House and what that could mean, as well as this AI excitement, if this deal was priced in November or December, I think we're having a very different conversation than in the wake of DeepSeek back in January and in the wake of some of these reports, again, from Cowen or commentary from the likes of a Joe Tsai.
All right, Bailey Lipschultz, Bloomberg senior equities reporter, thank you so much. As CoreWeave, again, is trading below its IPO price, just over $39 a share right now, trading into, obviously, what is a wider sell-off day. The NASDAQ 100 down 2.6%. We want to add the voice now of Katie Roof, who covers venture capital for us here at Bloomberg. And Katie, when we think about an initial public offering, finally getting the exit, obviously, this is probably not the way that anyone wanted this to go. Does this send a signal more widely about the hopes for a revival in capital markets activity, not just M&A, but also things like initial public offerings that everybody was anticipating could happen under the Trump administration? The environment's looking a little bit rougher now.
I can tell you there's about 1,000 unicorns in Silicon Valley that are looking at this and worried about it because there's so much pent-up demand for IPOs on the sell side, and they have not been finding the right time for several years now to IPO. I mean, there's only been a handful of tech IPOs in the last few years, and I know about 7 venture-backed companies that were looking maybe to IPO in Q2, and, you know, some of them might go out anyways just because they're getting desperate, but that's usually not the timing that is a good time to go public. And so I think that they're looking at this and they're probably a bit nervous because, you know, as you've noted, it opened lower than it priced lower than the range, they reduced the size of the IPO. All of these are negative, very negative signals about demand, although it's also could just be specific partly to the company that maybe the bankers overestimated demand for this particular company, and so we'll have to see on some of the others.
You know, another stock I'm looking at today, Katie, is Goldman Sachs. It's down $20, almost 4% Having talked about animal spirits going into this administration, there are big questions about what it means for M&A for the rest of the year and what it means for new issues for the rest of the year. If this keeps going in the direction that it is going, where are we for IPOs in the second half of 2025?
So IPOs just don't like volatility. And so I think the key thing to watch right now on the markets is just, are they stable? And then for tech IPOs in particular, you've got to look at the tech multiples and, how tech stocks broadly are trading. And that will, signify whether there's an appetite for new listings. But I think last year the window was a little more open than people thought. The ones that went last year, most of them did okay. But so many tech companies were waiting because they thought that a Trump administration would be better for the markets, and they thought that they were going to time it perfectly. And now it's looking like, for various reasons, that some of these IPOs haven't gone as well as planned.